this pullback down to the 200 SMA, there's really three major moving averages that I use. It's always going to be the 11 SMA, and then I always run a 50 SMA, which is this red one, and then a 200 SMA. The only thing that I do is I trade with the trend. That's like, I've spent a lot of time and a lot of time back testing too. Like if you guys have been a part of the trading community for like almost 6 months, 12 months now, so that we've extensively tested reversal strategies, harmonic strategies, looking for like every type of reversal strategy and trend strategy. And I'm telling you, like by far, the absolute most stress-free, best trading strategy that you can do is any strategy that is just going to be with the trend. And I've actually had a lot of people in the past week and a half be like, dude, I've made so much extra money just by following, and I forget who it was yesterday, somebody was like, dude, I've made so much extra money just following the trading bots that we have in the Discord. And he's like, there's so many trades I wouldn't have taken. And it's entirely right. And that's why I follow them as well. And I can show you like a couple of instances of but just trading with the trend and trading what's in front of you. There's so many people who've probably been sitting out this entire week and a half watching the market rally thinking like, no way I can continue to run. When you trade with the trend, it just makes everything easier. Like trade with the general market drift. It's going to just make life easier. It's going to make things significantly less hard on yourself. So if you look here, these are going to be all of the trades that the trading bot has taken, right? This is just like our trading script, but everything that it's taken in the past couple of weeks. And if you see here, like there's so many times that people are thinking like, oh dude, Nvidia's overextended. Yes, right now we've taken 2 losses now that the trend is starting to change. We're under all 3 of our SMAs now, right? So this is pivotal, the fact that we're under all 3 of these. But beforehand, right, there's no reason to be shorting. Like we can just be catching 0.84%, 0.61%, 0.54%, 0.63. Then we do get a small 2% loss, 2% profit, 1.2% profit, 0.5, 0.6. You look here, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. So basically 22 wins in a row. And including myself too, a lot of times I wouldn't be trading that. I'd be like, dude, I think it's overextended. I don't think the market's going to continue to run. I think I should, dude, like a lot of times I'd be like, I think I should be shorting Nvidia. And there's just no need to, right? Like trade with the trend and trade what's in front of you. It would be so much easier. So we were talking in the past couple of weeks about this 200 SMA, got this nice bounce off the 200, and now we're approaching this resistance level here of like 240. So we have, now that we've rejected, what is this now? 1, 2, 3, 4 times. So as we push up into this resistance level, we're going to be looking for a hold above, potentially a couple, maybe like a consolidation on a weekly chart for a week or so. But once we can eclipse through this like 255 level, look at how little volume there is from 255 on the volume profile all the way up to $300. So I think that if Tesla pushes through this level, we're easily running up to 31%, not in 2 weeks, obviously, but probably 31% in the next couple of weeks. And if you were to pop out to an even further time frame, you can see that if we were to eclipse over 250, there's like no volume back up until like 374. So I do think that there is a lot of upside, but the biggest thing that we're going to have to get through in the next couple of weeks specifically is right here from like 264 down to about $249.97. That's really going to be that big thick area of volume that I think is gonna be tough for us to get through. But once we're through that, we're pretty solid. All right, let's go through. Let me see. Let's take a look at SPY as well. We can also go through at a bunch of positions that we ended up closing out this week. I wanted to get through total market first because it seems like we're probably just going to continue to rally. We're coming up here on the S&P 500. We're pushing up through $455. Yes, we have this order block at about 457 to 450, but that's the only thing really stopping us here is this price level. If we were to zoom out even further, you can see here we have a cup and handle formation. It's working out perfectly here. Big cup, solid handle, breakthrough. We just need the volume to continue to run through this. I won't be surprised. Maybe we pull back down to 443, but I do think that we will probably end up seeing in the next couple of months the S&P 500 bouncing and probably moving its way up to like 480. And if we even look at like the smaller time frame, like let's just pull back and look at a 65-minute time frame. At this point, there's no reason to be short. We're just going to continue to ride this trend all the way up. We're still trading over the 50, still trading over the 11, still trading over the 200, way above the 200. There's a chance that we can come back and test this 50 SMA, maybe even test the 200. But until that happens, until we get that switch, like we're just trading the upside here, right? Just like as back here, every single time that we would come back, near this level, we would short. Every time we come back to this level, we would short. We're just trading with the trend. And there's going to be times too, right? Like there are going to be times that trading like this is just not going to work out. Like for instance, if we were to pull back and look at this last like massive rally that we really had on the S&P 500, March 2023, bottomed out. Once we got the cross on all three of these, we saw a 13% run on the S&P 500 in about 150 days. You think about it, keeping it very, very simple, every time we even pull back down to this 200, you could have went long. And there is the one time where we get this cross here. All of these other times easily make up and easily pay for it. So you can see past 4 years, 272% return. Trading this strategy on a 65-minute time frame. But if you look, like this is where you're making so much of your money, is in these massive rallies and in these big runs where you're just consistently collecting profits day after day after day after day. And you're going to take these times where you're going to end up having these types of losses. But at the end of the day, it's so, I don't want to say, it's really funny, but I think that I wanted to do like an entire video about this, but I think that so many people get trading wrong. I think that so many people look at trading and they look at their trading strategy. Because, all right, so I'll explain to you, right? Like I have a friend right now who is trying to pass an FTMO challenge, right? He was doing it alongside of me, and I'll give you the exact example. Like I'll show you everything exactly what he's running. He's trading the Tesla 15-minute time frame bot. Like I was just like, dude, follow this, just follow one ticker. Because the problem when it comes to like doing an FTMO challenge or any type of prop firm challenge is that you're always going to have max drawdown, like limits in a day. So your number one goal should be not how do I, let's just take this example, this trading strategy here on Tesla, right? You guys can all see this. So if we followed this very basic trading strategy, which is what all the trading bots in the community are based around. In the past 13 months, we would be up 92%. Asset performance right here, asset PERF, that's how much Tesla is up. So Tesla's only up 3.8%. We would have made 92%. So we are way outpacing Tesla. And you can see here that our wins is 84%. So we're winning very frequently. And our losses is 16% of the time. So we are winning very frequently. It's very good. So if we're looking at this, we have to say to ourselves, if we're trading like in some sort of prop firm, or if we're not even trading in a prop firm, we just don't want to lose a ton of money. Like let's just say that we can't lose more than 5% in a day, or we'll fail a prop firm challenge, or for some reason you just don't want to lose more than 5% in a day of your total account. Well, instead of saying like, okay, how can I make this strategy better? So that you can see here, our max loss streak was 3. So that means that we had 3 losses in the past year in a row. That's the worst loss streak we ever hit. And with an average loss of 4.55%, that's going to mean that your worst hit, which statistically it will show you here, but on average, your worst hit in a year is going to be a loss of 15%. So we know that if our max drawdown, we don't ever want to be down more than 15%. So that means, let's say you have a $100,000 portfolio, that at your worst case, you would have been down 15 grand. But let's say that you don't want to do that because you don't want to hit a max drawdown, or you just don't want to be down 15%. The way that you get around this, in my opinion, and what has worked the best for me, is not by saying, how can I make the trading strategy so much better that I'm not down 15%, right? And this is going to be some like meta shit you guys are going to learn that they don't fucking really teach. Instead, what you should be saying is, how can I risk because we cannot control the market, and you're never going to be able to. So what you should be saying to yourself is, how can I risk myself so accordingly? Because, all right, here's the problem. Let's just say that we took $100,000 that's in our prop firm account, right? And we can't lose more than 10 grand in a day, but we know that worst case, we get 15% max drawdown. What we would do is, instead of taking the $100,000 and trading with that every day, we would take 33% of it, because we know that the worst case scenario would have to happen times 3, which means statistically the chance of the worst case scenario ever happening is near none. Right? And even if it is, if you're trading with your own money, it's not the end of the world, because there's no, hey, we're going to take your money from you. But if you're doing a prop firm challenge, or you're trading for a company or something, then they might pull your account from you. So the goal is not to say, oh, the goal is really not to fail. What I've been told my friend was this. I was like, dude, listen, instead of saying, how can I trade with the whole $100,000 that I have and just mitigate losses, instead, you should just be trading with $33,000 of the $100,000 and only trade one ticker. So just This account is only Tesla. We only trade what's here on the screen. I only enter when it tells me to enter. I only exit when it tells me to exit. And obviously, you can decide if you want to follow your own strategy or not. And what I said to him is, think about it. The return for the year is 92%. So now the problem is, if you're trading with 1/3 of your account, what's your actual return on the portfolio? It's not 92% because we're only trading with 1/3 of our account. So what's the actual return on the portfolio for the year? It's 33%. So yes, you are trading with less money, so you're going to have less drawdown, but inherently you're also going to have less returns. So off of a $100,000 account, you would have theoretically like less than 0.5% chance of failing an account challenge, but it's going to take you time. So now you have to think to yourself, guys, how do you scale this, right? Because you're capping how much money you'll be able to make. I'm not telling you guys that you should do this, but what I told him to do is like, well, the way you scale it is you have multiple prop firm challenges. You run 5 $100,000 prop firm challenges at one time. Each one of them only trades one ticker at a time, which is about 1 to 2 trades a day. And you let those all scale, but don't over leverage. See, the problem is traders just fucking blow their accounts up because they put themselves in a situation to blow an account up. Like, the thing is, like, if you never put yourself in a situation to blow something up, you cannot blow up. Now, you're also not going to be able to make 1,000% return on your money. Yes, this is recorded and it will be posted later. Do not worry. But like, the only reason that you're blowing an account up is you're positioning yourself to blow the account up, and that's okay. Because now you can accept and be like, actually, if I really didn't do this, if I really didn't put myself in these situations, like, I would never blow my account up. And that's the thing that, like, I've really learned over all of these years is like, guys, you don't need to be doing anything crazy to make phenomenal returns in the market. Like, you just have to stick to a simple plan, trade with the trend, whether it's up or down. Don't try to be smarter than we have to be. Accept losses when they occur, and don't over leverage your account or over leverage yourself with options, because then you're going to act different. You're going to trade differently. You're not going to trust things as different. You're going to feel like you need to make money. And like, the truth is, if you were to run this very simple strategy here, you guys would be able to see this. Is there music in the background? I don't have my headphones on. The fucking hell? I don't hear anything. It's weird. But I do see, I had music on some channel earlier, and I was like, this is terrible, but I can't hear it. I don't think I have. Oh, here it is. Okay, actually, all right, there we go. Now it's off. Should work. I don't know if you guys can hear that or not. Sorry. All right, so anyway, like, overall, the basics of any trading strategy can be very, very simple. It's just about being able to execute that over time, especially when you're looking at trading, which is the way that I really look at it nowadays. Is from like a quant lens, which is more of like, we're just trusting numbers. Like, it's all you have to really be focusing on is, let's actually go through this, right? Since we do have a good amount of people here and a lot of people are new. What do you guys, what personally do you think challenges that you guys are going through? Like, if you were to look at your trading P&L, or if you were to look back through all of your trading, what do you think it is? Like, do you have a high accuracy rating? But if you're like, dude, I'm winning like consistently, but for some reason, like, my P&L is just not going up. Like, it might be that you, in that instance, a lot of the times, if you're highly consistent but you're not profitable, it just means that your average losses heavily outweigh your average wins, right? And if that's the case, then what you need to be doing is usually trading with less money and focusing around the losses aspect. But what I've noticed is a lot of people usually tend to just trade with too much money or too much percentage of their account, which was my biggest problem. My biggest issue when I started trading is I understand too, like, from a human nature thing, if you guys really want to become like phenomenal traders and phenomenal investors as well, really study human nature. Like, really spend the time to read books on human nature and understand how human nature works, because it makes a lot of sense. It can teach you how to learn about your own risk tolerance, because I can sit here and teach you guys, be like, all right, every single time that XYZ occurs, we enter. Every single time XYZ closes, we get out, and at the end of the day, here's how to trade. But the fact is it's not that simple for people to execute upon. Like, I've had mentors who are like, why, like, maybe you shouldn't give away how you trade exactly. Maybe you shouldn't give away the recipe to the trading bots. Like, maybe you shouldn't give away, like, et cetera, et cetera. And in my personal opinion, it's it's not about like how to trade, right? Like the value that I try to provide, and I think the value that needs to be there in the market is not like how to trade. There's so many people out there that teach you guys how to trade, but it's about like to have somebody to guide you. Number one, I feel as like a responsible leader. Like, hey, this is how losing happens. This is how we lose correctly. This is how we learn from losses. This is how we win respectfully, right? Like I try to win just as respectfully as I lose. Like I'm never going to be overly inflated about a potential win, and I'm never going to be extremely upset about a massive loss. Like I've come to the point where I've been able to remove my emotions from that. And I will say, unfortunately, like so this is actually a question I get a lot from a lot of people, but a lot of people are like, how do I remove my emotions from trading? And the absolute shit truth to this is you have to start becoming a successful trader. What happens is like, as you start to, and I don't know how like, I don't know what you guys do outside of trading, but like, this is just like life. Like as you start to make more money, you really start to realize how little money that is and how much brackets they are. And then you start to realize how little day-to-day shifts in your net worth actually affect your life. Like it doesn't, right? Like when I was so broke that I was like stealing out of grocery stores to eat dinner, if I would have made 20 grand, my life would change drastically for that like month, right? But like if I were to make 20 grand this week, it's not going to change my life. It's going to be fucking awesome, but like it's not going to change my life. You just have to realize that. And this is going to sound like very mean, but I really wish somebody would have told me this, right? I really wish somebody would have told me this. You have to trade within your bracket. So really I think about this a lot, where I watch a lot of Shark Tank, and I think to myself how these people are coming to a person like Mark Cuban, and they're like, we're looking for $100,000 for 20% of our company. And they're like sitting there like this is the biggest deal of their life, is sitting in front of here with Mark Cuban asking for $100,000 for their company. And it's so much money to them. It's more than money. It's a potential dream. It's the ability to pursue something. It's the ability to take on this full-time responsibility. But here's the truth. $100,000 to Mark Cuban is like spending $1.50 to us. And it's crazy to think that a guy like him can just make someone's dreams come true the same way that we spend $1.50. What you have to realize is like, scarcity mindset and abundance mindset is very true. And this is why I say like you guys should be trading with so little money that not so little money, but a small enough amount of money that it doesn't fully matter to you, so that you can act in proportion to how much that will react. So for instance, if me 6 years ago, if I had only $25,000 to my name and I was following a guy who was trading, like I used to follow traders. I've been a part of all these other trading communities. I've been a part and paid for most of the trading communities, the bigger ones that you guys have probably seen. But one of the things that I noticed is like, I'd be like, oh, I'm going to take this trade. And I go into the trading community thinking to myself, like, this next trade's the banger, or even if it's not the next one, like whatever. And I'd go in with half of my account, or I'd go in with like 90% of my account, or I'd go in with half and then I'd average down. And I'm not realizing that this is one of hundreds of trades for this individual that I'm following. But this is like one of one for me. And the truth is like, we should never put ourselves in a situation where it's just one of one for us. And I think that that's the biggest thing, because think about it. Like if I'm winning or losing 5 to 6 grand in like a day or two, that is felt differently in my day-to-day life and in my risk exposure. Doing this for 9 years, I'm used to it, right? Like I don't want to let it affect my emotions. But here's the thing, I because this is where it becomes tough, because people like teach me how to not be emotional. If I've been doing this for 9 years, guys, you see every single day, I am not emotional. If I lost 100 grand tomorrow, I would be emotional. It's not a skill. It's just how much I'm trading with. Does that make sense? If something happened to where like the fucking market cratered 60% and I had a ton of long-term, like that would hurt. And the only reason that I don't feel pain every day or extreme greed every day, like if I made 100 grand today, I no matter how much I would try not to be ecstatic, I would be so fucking pumped. The way that I circumvent from that happening is by what? Risking appropriately. And risking appropriately caps my gains, but it also make sure that I'm never going to experience a situation that will ruin me forever. And that's the goal, because that's the only thing that we can actually plan. It's the only thing we can actually plan for. It's the only thing we can look after. I think that's the other thing to look at too, if you in the future ever decide to start your own fund, or if you ever want to go out and trade for prop firms, is like you can have multiple accounts. Like you go apply for 5-10 prop firms. You could go apply for you could start your own hedge fund, do an incubation fund. You could go raise $100 million. Just don't trade with $100 million. Like these funds out there right now aren't trading with 100% of their capital. Like the $40, $50, $60,000 that these guys are throwing around in options every day. Like that's less than probably 0.5% of the fund's money. So if we want to think like professionals and act like professionals, then we have to treat our capital the way that professionals treat our capital, which is why people are like, oh, what returns are you looking for in a year? I'm looking for like 40%. And you might think like, dude, how's he only looking for 40%? Like he's raking in profits. But well, relative to like how much capital I actually have, because the whole point is just being here long enough, guys. Like if you can spend the next 30, and I'm not talking about like necessarily here, but like if you can spend the next 40 years, if you're like younger, or even 20 years if you're older, like just learning about money, learning about how money works, how to scale it, how to think in probabilities, how to remove emotion from it. Like if you're just in and you're learning and you're growing every single day, it does absolutely nothing but compound for you and makes obviously more and more capital. Trade UK, can you shed some light on your long-term shares holding Tesla? You still holding them? What do you think about people? What do you think about people holding Tesla shares long? So here's the thing, right? When I look at Tesla, I'm not gonna lie. I'm gonna get killed by like a lot of people for saying this, but like I don't really want to own, like I don't really, like I've pre-ordered a Cybertruck, but like dude, straight up, like I'm not gonna lie, it looks gonna probably be built like shit. Like granted, I've only seen photos from like the car meets and whatnot, but like the panel gaps are so fucked. It's whatever. But I think that when I look at a long-term investment in Tesla, I look at this as so much more obviously than just a car company. But what I really am looking for is to build a position into this, a much bigger position, long-term. But the thing is, like, I personally don't think that Tesla is at a phenomenal deal. Like from a fundamental long-term investing standpoint, like I do not think that Tesla is in a great situation. I think that you're probably overpaying significantly for it. And I would say that, and this is where it's tough to give like long-term financial advice, because I don't want this to sound like asshole-ish, but like I really have to think about opportunity costs, right? Like for me to tie up like a portion of capital means that I will not trade that capital, which means that that capital that's not being traded has to make more money long-term than I would make and paying the additional taxes on it, because of short-term capital gains. So that's personally why I don't have a ton of long-term investments. A lot of times what I do is when stocks get to prices that I really like, which is what happened with Tesla. Like, I'm not going to lie. I was selling cash secured puts and I kind of just got fucking screwed. Like, so I didn't buy it initially. Like, I think Tesla's going to the moon. I was selling cash secured puts, pulling in really good income at the time from it. And I was like, if I get stuck at like, I think it's 202.50 was the strike. So I was like, if I get stuck at 202.50, what am I going to do? Like, am I cool? Am I going to wheel strat? And then I was like, fuck it. I'm just going to hold on to the shares long term. So my plan, and that happened back here on this drop, right? Like a long time, or no, all the way back down here. So let's pull back up. We actually go to this is what we're looking at a monthly back here. Pull back here on this monthly. It was back in 2022. So it's back on this pull down to 200. Down here in May of 2022. Actually zoom in a little more. And then basically my plan was like, oh, I thought we were going to pull back down sub like maybe $100, and then we hit 102 and I was never able to add to my position. So I do wish I would have sold more cash secure puts and added to my position. But I think from a long-term standpoint, like if you're somebody who is in this long-term, you have to be cool with, like, I would say personally, like I wouldn't hold the shares unless you like really plan to hold the shares for like 10 years. Like I would not be surprised if in the next year and a half, 2 years, Tesla probably pushes back. I don't know. It depends on how a lot of things really pan out. But like, I think that you're going to have to deal with a ton of volatility. And I think that the issue is a lot of people just don't know how to handle that type of volatility. As I said before, talking about the trading bots, which is why I don't usually take a lot of my capital and put it into long-term investments, because I can beat the asset performance by using a very simple trading script. And while it might not be 20 times, 30 times what the price of the asset's going to do, I get to live every day, even though I'm paying more money in taxes, I get to live every day never wondering, should I buy or should I sell? And that to me is worth a lot of money. Because if I had like a big portion of my net worth in Tesla, I'd probably be thinking every single day, like, should I really hold? Like, should I sell? Should I close now? Should I hold till 400? Or like, should I sell here? So for me, the reason that I really have just been holding this position for so long is because it's not like an absolutely like massive position that's taking up a ton of capital. But looking at the weekly chart, it does look like we should push back up to like 300. If Tesla did break back under 2, I would be kind of worried, and I'd probably start selling cash secured puts down at like $100. But I think the biggest thing is just being okay with the sheer amount of volatility that you're gonna just have to deal with. Any questions? Anybody have any questions or any tickers you want me to take a look at? Today's Thursday, so I'm gonna be putting a video out tonight. I have a couple of videos coming out next week talking about I think 4 or 5 different topics in like a tutorial style. But we'll see what ends up happening. I want to really focus on putting more evergreen content out for you guys too, like more tutorial based, videos and whatnot. But Rustic, dude, it's a close below the 11 on the weekly. Where are you? Yeah, for sure. Looking at where we are right now, like this type of close is definitely not a strong close. So one of the things like we say here a lot, and it's a really good point that Rustic brought up, but one of the things we talk about a lot here is, as hokey as it is like where the candles close is what matters. Like that's the big thing. And when you're looking at each of these candles, you're looking at psychology. You can see here, like this close here that's in blue, it's not a bullish close to the week. We came all the way up to 270 back here in October, but this shows that all of the bulls got flushed out and it closed at low a week. So that's not a good sign. And you can see here, as Rustic was saying, yeah, we're still like in this channel and it looks like this channel may break out, but look at how we closed under this 11 SMA. It's not like we closed up here near like highs of the week up around like 245. Like we actually closed close to exactly nearly where we opened the week. So that's not a good sign. And the other thing that's not a good sign, which I will say, I do have calls right now, but the other thing that's not the best sign rate is this too, that our weekly volume is even lower. And I would bet as well, right? If you come down here if you were to play wick to wick, which I usually play body to body, but wick to wick, look at where that's setting up, right? Inside the golden zone. And then even if you played body to body, right? Inside the golden zone. So short term, there's a big chance that we see this reject back down to 210 and then potentially bounce. So we'll see what happens. But yeah, overall, it's not the best move. Could see a run back below the SMA as long as we get to setting up big triangle resistance trend and SMAs. I think short term, we could definitely see a potential pullback, but like we need to hold this level going into next week. Like 230 to 235 has to hold, and then look how thin the volume is from 230 down to 220. So if that's given out, that's 6.5%. And I have some calls, but worst comes to worst, it's whatever. We'll see how that goes. Switch over here. So this was the setup I posted earlier for you guys. But with calls, you can see since we bounced here, still a chance that we reject here, but I entered calls initially because we were sitting here on this 50 SMA, and we've been following this level for a bit. Now I need to get rid of this. So I was waiting for this potential bounce off of this level here, off of the weekly open, because the weekly open, we know this is where we had opened off that week. So what I was looking for was this potential bounce off this level, back up here, and then back up to this liquidity zone. So about 3.5 to 5.57%. And also, guys, if you do not know either, you can get access to this dope fucking indicator since you guys are part of the premium Discord. So if you go to the new thread, you should be able to see a thread that will say premium indicators. You guys will be able to get access to this indicator that Angel created through his company Pinewave. So definitely fucking check it out. It's dope. I love it. It integrates pivot points, order blocks, smart money concepts. It's really, really good. And I'm going to be continuing to use it and continuing to do tutorials and stuff on it as well, the more that I back test it. Kelsberg, let's go over NVIDIA if you didn't already. Let's do it up. So let's go through and take a look. I need to get rid of all these indicators. So many going on. There we go. All right. So let's take a look, right? On the 4 hour, you can see here that we're still obviously in an uptrend. Still in this level here, but we're finally looking like this is our potential short opportunity. So we had this change of character back here where we broke over the previous week's high at $500. And as long as we were holding here, like I'm not going to lie, if they didn't have earnings, I still would be taking this position. And if I was taking this position long, I wouldn't have been taking the position long because I'm like, what, I guarantee that Nvidia is going to continue to run. I'd be like, fuck, man, I think Nvidia is probably going to top here. But I'd be taking the position because my requirements are met. Change of character with significant volume, pushing through previous week close. So, or previous week highs. So I probably would have went long here, no lie. We did reject here, and now we're finally seeing, which is something we've been talking about for a bit, but what? We're finally getting the close under the 11 SMA. My thought and my plan here is that on Monday, if we close under this stop loss level of like 485, a short would be pretty solid to enter. And the way that I'd probably play that out, entering short here, stop on a higher high, and then your take profit down at 450. It would be my first level of take profit, and then the second would be down at like 430. So I think there's a short opportunity for sure here on Nvidia. What was another trade that we closed out today? Let me actually just go look at any of these positions that we ended up closing out. So let's talk about Mara. We can talk about Home Depot too. So start first with Mara. Looking here at Mara as well, we ended up taking this position yesterday, and we're really trading like the same type of stuff here, right? We're really looking for, in most cases, this is like my main requirement here. It's nothing crazy. We're always looking for push up over the 11 SMA, holding over the 50 SMA. Sometimes I'll play retracements back, and we're just looking to trade this trend. And as we push through, we had this change of character break here at $10.40. We nearly tapped this target level of $10.80. This is where we took profits, if you guys remember, back on Monday. And then we waited, because this is our perfect case scenario, retraced it all the way back down to $9.83. We caught it back here at this level, pushed right through previous week high, and then today I closed right here at about $10.60. And of course, the DiCarlo effect reigns supreme, which just means I wait about an hour because I always sell too early, and then we get the run right back up. So very, very good solid trade here on Mara. Home Depot, a little bit of the same situation, but this is a little jankier. So we had this big push up after earnings, sideways consolidation here, and what I was looking for was this pullback down to our support level and the bounce off of this 50 SMA, which is what we got. So it was only like a 1% move, but I decided to take my profits today because my target level was only up at $310.92. So from where I closed up there, it's only like a 0.31% return. It really wasn't worth it to hold on to it. And I think, Uber was another one. Closed out Uber yesterday. I'm sorry, Uber. And Uber, another example. Change character, breakthrough, pushing through previous week high, continuing to rally, and continuing to run. Alrighty. Kelsberg, thank you. No problem. Any thoughts on gold, or do you not touch it? What is it, GS? I don't know what gold futures are on here. /GS is what it is. That's Goldman Sachs. Here we go. It's just GOLD. It's really unfortunate. This is actually a pretty good example. We can talk about this here. But it's really unfortunate because we were talking about playing this back when we saw a ton of volume coming through at this level here. But on Black Box like months and months and months ago, but I haven't looked at gold in a very long time. Let's see, let's go through. So GDX is a gold ETF. So let's do GDX. Let's do GOLD and GDX too. What are CFDs? US ounces. So on the week. So all right, let's do GDX. Just be easier. Let me actually trade that. Let's look here on the weekly, right? Very first thing is like what is our obvious trend, right? So trend for gold on the 200 SMA, like we're currently trading under this 200 SMA. So the only thing that we would be looking to do at this point is potentially short, right? We would have no reason to go long at this moment right now. You can see that we've bounced right here off this liquidity level. So this is a big volume level. So we came down, we bounced. What do you guys notice? What type of pattern do you guys see here? If you're wrong, just who gives a shit? Just write down IHS, boom. Yeah, so we have an inverted head and shoulders. So you can see that if it's on the daily, it's probably a little easier, but you'd be able to see that we have a left shoulder formed here. We have the head down here, followed by right shoulder. So we're getting a bottoming, a price action bottom, right, for this inverted head and shoulders. So when we have all this type of evidence, so that we're looking here, inverted head and shoulders, we're bouncing off of the supply level, we're pushing through previous week high, pretty good sign that we don't want to go shorting quite yet, right? So I would not be playing this personally. I would say this personally, I would not be playing this long just because the overall trend is down. That's the first thing that I would say. If you wanted to take a trade like this, like let's just say you're trading on your own and you want to take a trade like this, what I would personally say is You can take a trade against the trend in this instance just because it's long and because we have an inverted head and shoulders and because we're on the support level. I would take it with like half of a position size that I would normally take, just simply because we're trading against the trend. If we push through here, our next level is going to be up at 32.15. So the next thing that we have to say to ourselves is, how would we level this position out to make it even worth it, right? If we were to enter here, set a take profit at 32, it's where the 200 SMA is going to be, we'd have to set a stop loss under this weekly open right here. So a 2-to-1 RVR. Well, for every move that we move this, our RVR is going to get worse and worse, right? Which just means like, how much money do we have to risk for how much money we're going to make? But our chance of profit statistically becomes higher. So I'd probably set it somewhere around here at like 27.65. Really, I'd want to set it under this liquidity zone, because if it breaks this, we're donezo. So setting up here, that's about a 1-to-1 RVR with a pretty high chance of profit. If not, you set it here. But I think that the potential, so if this plays out, it's a pretty solid play. I'd probably not trade with as much, but as we come up here, what I'd maybe be looking for is potentially seeing how we play with this level of like 32.50 up to 34, and we could get a potential short in play. But see, like here, thing too is potential inverted head and shoulders here. I think we'll probably run up to 32, but like I don't like trading against the trend to short the rejection. So entry on the 200 SMA looks better, as it looks like it might roll over. Yeah, exactly. So it's looking like we're probably going to push up into this level. And like I would see what ends up happening when we get into this range once again. Let's look at the daily actually. So daily's coming up on this 200 SMA as well. And the daily also has a liquidity level here. But look at how much easier you can see how much better that inverted head and shoulders looks here, right? And look at how key, for anybody who's newer, this here, I'm going to change. I have to make it some sort of obnoxious fucking color or something. Let me see. And yellow. So this level here is a high confluence area. Does anybody know what that means? High confluent area. Basically, we want to be trading with a lot of other traders out there in the market. So we can't move the market ourselves, right? We know that. So we need big money, we need other traders. So a high confluent area very simply means that it's an area of interest to a lot of different traders, right? So if we look here, there's a lot of shit that's going on, right? Number one, we have this 200 SMA, which on the daily chart is a big institutional indicator, right? They use this for a lot of things. So we have the 200 SMA coming in hot. We also have this liquidity order block, this bearish order block coming up at $30, okay? We also have this double break of structure, because this is where market structure was, where we rejected. So now that is a triple high confluent level. So we have 3 levels here, plus people who are playing inverted head and shoulders, this is also a very important level. So in the short, what we're really looking for here, if we zoom out, basically, if $30 is broken and held over, it's time to go long, right? You could ride back up to 1660, or back up to 31.33, 32.72, 34. This is where I'd be running that up. If not, and we reject, then we're going to continue in this downtrend. So I think that you could play long here if you wanted. We really have to push through this liquidity level first, but a really, really potential solid setup playing out here. Good eye, good suggestion. Can you look at, someone else over here, HGX, what's up? Do you still see Mara going to $12 from here? Still worth getting in at this level. So I sold just to be safe today. But yeah, dude, I still think it's going to happen. So let's move in here. This is the only thing kind of worries me too. This potential head and shoulders. But let's move in here on a daily chart. A little easier to see. And let's get rid of this. So my main reasoning today for just like walking away at the time was because we had this liquidity level. We were up near the top of where like my initial target zone of like $11 was. And I was like, I'm cool just saying, screw it. But I do think that our next level that we're going to push through from here is right up here to where that fib level is of about $12. So I still think there's an 8% move to happen on Mara. I don't necessarily believe that I think if you're not in it already, it's probably best to hold off. In hindsight, I probably should have held my position. I didn't. Sucks. But I would say it's the juice isn't worth the squeeze at this point, because if you're entering here, $12 is the next level we're looking for. That's an 8% return. And then setting a stop loss down here at $10 minimum is an 8% loss. So this is a 1-to-1 RVR. I'd say if I wanted to get in for sure, because I think it's going to go further than 12, I'd start very small and then I'd average down heavy at about $10. Second thing, same for Palantir. Where could we ride this thing upwards? So Palantir is another one. Palantir got a lot of good volume today on the options market. I posted a lot of the unusual buys that were coming through. And this is something that we've been riding for the past week or so, right? We get this push through, change character, continuation. We actually played it right here earlier this week where we got the consolidation. We bought, once again, guys, high confluent area, right? This is the type of stuff we're looking for. And you can literally use the indicator that we have here. But just with a 50 SMA pulling back, we see the liquidity level come in. This bullish order block fucking rips right up. I closed it here at this liquidity level, but then we just kept running. I really torn. I've been watching the bot, like my trading bot all week, but it's trade Palantir, trade Palantir, trade Palantir. I think that we'll probably continue to see this move up to 24. But like next week is very important, and this close here is not the hottest. Straight up, this one right here. We rejected here, previous week open and previous week low. We're holding. So these are our pivot levels, right? If Palantir pushes over 2050, this bad boy is running up back up to 24. If we break under, we're pulling back down. So I think like on the bigger time frame, if I was playing this on a weekly, what I'd be looking to do is this, right? I'd be looking to enter a position here if I was bullish with about half of my planned position. If I was going with options, I'd probably be looking at February, March, because we're looking at a weekly chart. Upside's 20%. Downside to this stop loss is about 18%. So we know statistically that it's in our favor, but I want a better RVR. So I'd start with half right now. And then if we pull back to meet this, which I think will happen, right? If we pull back down to meet 1750, that's where I'd average down and then play it out like this. But the pivot levels you're really going to be looking for next week is like 20, 50, and like $19. Those are very important. And can you look at Chewy? Let's do it up. Hit Chewy last week for a real solid trade. Does anybody completely lost? I just want, if anybody's here and they're like completely lost, please let me know. Because I'm not going to explain everything right now, but I can shoot you guys like, videos and courses that we have that you can take advantage of to learn any of this. If you guys are like, dude, I have no idea what you're even showing on the screen right now. I can send you guys some videos and we have courses coming out next year. So basically we're building a website that you guys will have companionship and be able to access to as premium members in the Discord. But we're building that out. And what I'm going to be doing is dropping all of the brand new courses on everything that I know about trading that will be coming out sequentially through 2024, so that this way you guys can digest it in a good time. I am one of those people, like I know how it is, dude. If I drop like 100 hours worth of courses, people will just fucking skip the shit. So I'd rather be like, here, fucking 30 minutes a week, 60 minutes a week. You must watch this to get to the next one. And people might hate me for it, but I'm telling you, it's gonna be more than worth it. Please cover SPY. Let's do it up. And please send me the videos that you have help me learn. I'd really appreciate it to get going with day trading. In the courses and seminar section, I can just drop these for you guys really quick. We have a bunch of videos. So if I'm technologically advanced enough, I can probably, here you go, Kelsberg. Boom. So you should be able to click that, and then it's going to bring you to the courses and seminar section. And at the very top, you'll see Introduction to the Stock Market. That's very basic. You might not need that, but if you want to quick freshen up, you can do that. Technical analysis course, which will teach you a lot, and the disciplined traders course, and then all of our beginner videos on like learning how to read flow and everything. So let's talk about SPY, and then let's do Chewy, SPY, and then we will hop off. Bedtime in Germany. See you, man. Dude, we actually have a lot of people in Germany. Kendo, who's one of our moderators, he's in Germany. A lot of people in Germany. It's dope. A lot of people in the UK in general. But good night, my friend. Have a good weekend. We'll see you here on Friday. Looking at Chewy, I was trading this not too long ago. You guys can see here, we had this push up, pulled back down to this SMA, and now we're kind of consolidating and holding here. I overall am not a fan of going long here, just because it's looking like we will probably push back up to like 22.13, but we're still in a massive downtrend, like 200 SMA is ripping down. I think this bounce is really just like a very oversold bounce. So I'd be careful going long for too long here. Like I hit this last week for an overnight swing. I'd be careful going long. What I think would probably be better is waiting to see if we rally to 24 and then shorting it. But if you're in it long, maybe hold on. Here too in France. Bonjour. What's up, Linda? Thank you for being here. Thank you to everyone. We're multi-continental. I would say that judging by like my criteria, it doesn't fit all of it. It fits about half. We have the breakage structure. We are trying to bounce here, so I would say, you know, if you do decide to take a trade, make it smaller. But like I can always be wrong. We're just looking off of basic technicals. So let's go about SPY too, and then we'll hop off. So let's look at SPY at a couple time frames, right? Let's go through. And let's look at the weekly time frame right now. This is like the major reason why I use two trading softwares. You guys don't have to. I use Trends. Well, you guys definitely don't have to. I wouldn't even recommend it. But I use TrendSpider for most of my basic trading, right? It houses all the trading bots. It's what sends all the webhooks to the Discord community. It's very simple, very effective. But the thing that I don't like here is that I can't add my own indicators, which I can do when it comes to TradingView. If you guys have TradingView, you get access to the Traders Helping Traders premium indicators. But I like using this, and I like to post multiple because you guys will get a better understanding of like what the different indicators are looking for and what they're doing, because we're still running the same things. We're still running an 11 SMA, still running a 50 SMA, still running a 200. We're still looking for the same things. It's just that we can integrate our own settings into some of these, which is why you'll see up here like winning trades versus losing trades, etc., etc. Looking here, obviously on the weekly, SPY has been trending up. And in the shorter time frames here, we had this trend and this pullback down, but still the market's trending up. So on this weekly time frame, the 200 SMA is very important, but it's very rare that we pull back to it, right? It's very rare. And when we do pull back to it, it's very important. So in most cases, like what I'm looking for, there's a very, very, very good book by Dr. Alex Elder called Trading for a Living. That's very, very good. But what I like to call, he calls between his 11 and his 22 SMA, he calls that his value zone. But for me, my value zone is between the 11 and the 50, right? So all that means is like, let's just use this weekly as an example. Every time we pull back between this level, I'd go long, setting a stop loss under the 50. So for instance, like here, we would have went long, looking for a higher high, stop loss under the 50. Here we would have went long because we're between the 11 and the 22, take profit on a higher high, stop loss under the 50. Same deal here. We would have never gotten stopped out because we didn't close directly under the 50, continuing to run. And then eventually here we would have lost. So what I'm really looking for is stocks to be between this value zone. So short term, if we're trading over the 50 SMA, that means short term we're in an uptrend, right? So for me to go long, I really want it over all three. This would be a time for me to short while we are here using the 50 SMA and then riding down to our 200 SMA. And then if we would have broken out of the 200 SMA, then we're all short. So we saw this pull back down to the 50. We saw this bounce. We see the push through this resistance level. Previous week lows push through, previous week highs push through. And now look what we have here, right? And this is, you can see this on multiple indicators, but we have this liquidity zone here on Angel's indicator, right? Which you guys get access to, this bearish order block. You can also see, right? That's where this bearish order block is sitting here on TrendSpider. So we have a bearish order block coming in. Short term, I'd expect SPY to reject in the next week or so. And when I say reject, I don't think it's gonna be a massive sell-off. I'm just thinking that, like, if you look Friday, it's probably gonna be red. Probably slightly red. I don't think there's going to be a ton of volume half day. But what I would expect here is if we do a fib pull, so we take our Fibonacci retracement and we're to pull this up here, I think what will happen is we'll probably reject at this liquidity zone. Maybe we push Friday up to 459, 460. But what I think is probably going to happen is we're going to push up to 460, reject, and this is what I'd love, 5% pull back down, and look at where that would line us up, guys. I was going to write a little note that said go long. But this pullback right to this fib level on the 0.5 would also line up with previous week lows, would also line up with the 11 SMA, and then we go long as fuck. And we ride this bad boy in the sunset into December and probably into the new year. We ride up to $480. I think we're looking pretty solid, looking pretty good. So we'll see what ends up happening. And let's see here too. If we pull back, we can look at the shorter time frames, because this will help you guys as well, like pulling back to this 1 hour. Looking at the 1 hour. All right, so let me ask you guys, right? Looking at this at the weekly, talking about this potential rejection, and let's say you wanted to play the short. Okay, I'm not saying that you should, but what would be confirmation that we are rejecting and that we will pull back down to this level? What on the 1 hour chart would be an indication of that happening? This is why multi-time frame analysis, in my opinion, is so good, because when you have like bullish setups on like the 1 hour, the daily, the weekly, like you can almost just throw shit at the wall and make money. Like, I know it sounds like almost like just like an asshole to say that, but like when you're trading, it reminds me a lot of, I'm not going to go too sideways here, but it reminds me a lot of business. And I remember my mentor telling me like an idiot can make $1 million in the best market possible. Like in the best, like if they're like fucking Alex Hormozy says, like, oh, if you own a hot dog stand, like you don't want the best hot dogs. You just want to be the only hot dog store in town, the only restaurant in town when everyone's fucking hungry. So when you're trading with everything going your way for the past couple of weeks, there's no reason you should be not making money. Stonks only go up. Right. And here's the truth, right? Like if you guys are coming here in the past 2 weeks and you're like, dude, I'm making so much money. This is fucking dope. I'm telling you that over the long run, you're going to make a fucking killing. But it's not always going to be this way, right? There will be months where we lose 5%. There will be months where we break even. It's just a part of it, right? And there's just going to be months where we're range bound in the market and shit's just going sideways. For me and for my strategy, the worst thing that can happen is sideways consolidation. That's actually the worst thing. That's why you can see that like with a stock like Tesla, when we were going through the returns earlier, you saw like we would have made a 90% return in a year while Tesla was only up 3%. We don't need the stock to move or to only go up. We just need the stock to be volatile and to move a lot, which is good. But going back to the question of when would that short occur or when would the confirmation of that put happen? Or the confirmation of that retracement. Let me, where my circle is, just do right here, this level. If this level's broken, and why? Well, one, it's a high confluent area, but two, the 50 SMA. So if the 50 SMA is broken, if the previous week high is broken, if the weekly open is broken, and this fib level is broken, and that's also our point, our break of structure is broken, there's a real high chance we're going to break, right? There's a really, really high chance that we're going to crater. So if you're somebody who's long right now in the market, we want to see this bounce and continue to run. I posted, which I can, if you guys go to the Peter's Day Trade section, I posted on Sunday night and I'm going to do it again this week. I've just been trading a lot, but let me go back real quick. Here it is. Okay. I will copy message link. I'm going to drop it in the open chat for you guys here. So I'm going to put it in the live stream chat. You can click it. You'll be able to see it. But every week, what I'm going to be doing is posting here what stocks are considered to be okay to follow with the trading bot, right? Because like I said, if we're trading over all of our SMAs, if the Heikinashi's green, if the weekly's looking good, then we're good to be trading our trading bots. Like we're good to be trading our strategy because the overarching trend is up. So in this instance, like if SPY were to break 451, I would probably no longer be trading the bullish side on the market. It doesn't mean I'm going to go short. Let me ask you though, when would I go short, right? I'd go short when the trend breaks. I'd go short if SPY is trading under the 200 SMA. So when we're trading over the 50 and we're trading over the 11, this is like, and between, this is like we're long and we're just riding the trend. When we're between these levels, it's a yellow light, right? Think of like yellow light, red light, green light. Green light, trading over both of these. Yellow light, trading between these. Red light, trading under. We don't want to touch it, right? Very, very simple. And I know for some of you guys, you might be sitting here like, geez, dude, it's not that easy. Like, can you just, but like it is, right? It's just about trading with a small amount of capital relative to what you're trading with. Getting used to, like, I think the biggest thing is sit down and say to yourself, like, all right, I tried this guy's trade. I've tried this guy out. Like, let's just say you're a newer member, or if you've been here for a while, you can also test this. Just be like, all right, I'm going to try this out for 3 months or even a month, right? I think for me, every time I test a trading style, I have to give myself 100 trades. But I would just say, like, I'm going to dedicate myself to X amount of days, X amount of months, right? And we're going to take 50 trades, and whatever that pans out, we'll see how that move happens. And then we're going to start with a small, like somebody said something that was so fucking good. And I really should push this more. But in the testimonial section, they were asking, like, is there any people who've been a part of the premium for a while now? And how many of them, like what would they say? And everyone said great things, which is fucking amazing. But I think it was Salty Sailor or somebody, I forget what it was, I can look. But they said, I would highly recommend for your first 2 weeks paper trading in the academy to start. Like, and it makes a lot of sense, but you just have to realize like how we operate, which just always helps, right? And then on top of that too, realizing that like I'm never looking at trading at a trade by trade basis, okay? Nobody should be looking at a trade by trade basis. You should always be looking at a series of trades. I never look at like, all right, what's the next trade? How's the next trade? How's this going to go? What ends up happening? Like, I'm looking at like, okay, how have I performed for the past 50 trades? How have I performed over the past 100 trades? Like, there will be days, a couple of months ago when I was testing this trading bot that I was working on. It was a harmonic trading strategy. And I was showing the team statistically a 91% chance of profit. And the trading bot failed 9 times in a row. And here's the thing is like, when you guys are thinking about trading, you're not also looking at it from like a mental math model, right? Like there are guys in Wall Street who get paid hundreds of thousands of dollars for couple of sessions to just run mental models on risk, like risk assessors, because that's all it is, right? You have to run like the, okay, let's just look very briefly and we'll hop off here, but let's just look at some raw data, right? Let's go to the trading strategy. Let's go to my trading bots and let's go to SQ 15 minute. This is a 15-minute trading bot. This is mainly day trading, kind of swing trading, but let's just look at this, right? Past 13 months, trading bot did 62% return. That is way better than the underlying asset. You can see here that the blue is what our bot has performed at and what the portfolio would have been at just following this, right? And this is going to show you the underlying asset. But here's the thing is like, we only know, this is something I really need you guys to really get an understanding on, because we know that we would have made a 62% return. Like actually we can fuck with this and be really fun. So we know that in the past year, we would make 62% return, but we know that we would only make the 62% return in 301 trades. Who knows what would happen in 100 trades? Like we can come up here and look, let's just see what would have happened. So at 62%, let's just say 62% divided by 13. That means statistically you have an average return every single month, 62 divided by 13. Of about 4.5%, 4.7%. But if we were to come through here, you can see in the past 90 days, 4.14%. So that's sticking with our average of 5%. But let's look through now at the past 700 candles. So the past 30 days. So look at this. We said that we have an average return of what? 4.7% a month. But look at what the past month would have been for us. 3 times our average return. But that means that at some point in our math, we were taking some losses for months, because if we made 3 months worth of profits, that means, let's look here. So from here, our portfolio was up 57%. And then at one point it dropped all the way down to 20%. So if you think from March, guys, of 2023 to October of 2023, 3 months, if you were trading just SQ, you would have lost money for 3 months in a row. Now, really be honest to yourself. Think how many people would still continue to trade that strategy after 3 months of losing. Let me actually ask you guys, respond and be very honest with yourself. Would you still be trading that after 3 months of losing? Like me 5 years ago? No. I would have been, it's not like I've been doing this too long. Like this is where people who make a lot of fucking money, they think in decades. Like they're not thinking about the next couple of months. They're thinking decades. You got to think like a business, guys. Like if we were sitting down and you guys were on my board of directors and we were running a hedge fund together, do you think that we would be like, all right, let's see how the next month goes? Like, we'd be like, no, dude, we need years and years and years and years, right? So now look at how this works out. Like we said, we had 3 months of losing, but now in the past 30 something days, we've made up multiple months. Just in the past, 15 days, we're up 10%. So this is why taking every single trade that hits your criteria for the most part long term, it's a must, in my opinion, if you're somebody who's going to specifically want to be a quant trader, because there's so many times that you're going to look at the trade and be like, I shouldn't enter, overextended, but then we continue to run. And this is what I'm saying, that like, this is the shit that I feel that people don't tell you and that I don't even talk about enough because it's boring, but I should. Let's say you were like, dude, all right, I want some sort of diversity. I like SQ, I like Nvidia, I like Amazon, I like Tesla, and let's just say like Apple, right? Those 5 stocks. And you're like, I want to trade the trading bots. I like this trading strategy. It's super chill, right? What I would have done before 5 years ago, 6 years ago, when I thought that when I was successful in trading, but I didn't fully understand risk management, what I would have done back then is I would have said, you know what I'm going to do is I am going to take all of those tickers and I'm just going to trade them all under my account. And here's what ends up happening. What if all 10 tickers are in one trade at the same time? I have to take them. So now what happens? Now I either have my entire portfolio in all these trades at one time, and if the whole market goes up, I'm making a shitload of money. If the whole market craters, I'm screwed, right? So I have too much exposure now. Or what's going to happen is I'm going to end up cherry picking trades that are not going to end up working out. So instead, what I would say is what I personally would do is if I'm trading shares too, I would take my account and then I would literally split it between those stocks and pretend that each one of those tickers is their own little hedge fund. So that if you take SQ, right, and SQ in the past year, I have to write this down, but like SQ in the past year did 62%, and then Tesla in the past year did 92%, and then we have, what would we say, Amazon and Apple. Amazon did only 45%, and then we'll just say Apple will do 4 of them. And then Apple pulled 43%. We divide that by 4. That means your account would on average have made a 60% return last year, right? Because for me, like, and especially as you guys start to like grow your portfolios long-term, right? Don't think like how much money can I make in the next week, 2 weeks, 3 weeks. Think like how much fucking money can I amass over the next 20 years? Like that's the thinking we should have here, right? There's a lot of places on the internet to make short-term money. And what I want you to understand is we're constantly making short-term money here, but it's all to build towards our long-term goals, which is why short-term profits don't mean shit to us. And why also short-term losses don't mean anything to us, because we're just hitting these singles and losing some singles over hundreds and hundreds and hundreds of trades to build up an invincible portfolio and an invincible strategy. Jim just started new portfolio with the DV2 swing method. So for those of you who do not know the DV2 swing method, that is the trading bots. The DV2 swing, it just means DeCarlo version 2. I didn't know what to name it. It's this exact trading bot I'm showing you guys right now, but it's a 65-minute time frame. So the 65-minute time frame is usually going to be like a couple of trades a week. I don't have to make the decisions. I get to trust the process. At the moment, taking every trade on all bots, but may review that. Why have you chosen the tickers you have? Many thanks. Very, very, thank you so much, Jim. So, and the goal with the trading bots, and this is like the thing I want you guys to understand, right? Like as somebody who has, when I say I've sat here and I've like back tested and coded, I'm saying like I had to give this up for a bit because I was getting arthritis in my shoulder and my back and my arms from sitting on a computer 15, 16 hours a day backtesting this shit. What I realize is almost this like fallacy to try to continue to make something better and better and better. Because at the end of the day, like the goal is not to make as much money as we possibly can as fast as we can. The goal is sustainability, right? And if you can continue to follow a simple trading bot like this and not get massive returns every month, and some months maybe lose a little bit of money, but it's about trusting the process. And that's the big thing that I've really tried to push here is trusting the numbers. Like the reason I'm so confident is I understand long term that we will be more than fine following this process, right? And that's why I have no problem. And I think no problem taking losses. But I think for a lot of people, they have problems taking losses because they don't actually trust that they're going to be a profitable trader, right? They like, and I understand because like if you don't actually believe it, it's very hard to have confidence. But going back to your question, Jim, which is a very good question, why have I chosen these tickers? So I can always add more, and I will add more in the future if you guys want. But the main reason I chose these tickers is because of volume. I understand that a lot of people will probably try to trade options with these, and you can trade options with them, but it's much harder. It's just always going to be much harder because from a risk standpoint, you're just bringing in the unknown. And whenever you bring the unknown in, it can make things way better or way worse. But the reason I picked them, Jim, was because of volume. I want to make sure that there was a lot of liquidity. I wanted to make sure that if somebody was going to be following this with options, it's not going to be something like Home Depot, which I really like to trade, but I really only trade shares with it. So that's why I picked like the big ones like Tesla, TQQQ, SPY, Meta, etc., just because they have so much volume. Now, if I was trading with no options at all, which is what I recommend everybody to try to get to, like, in my opinion, your goal is like to get to 40, 50 grand as fast as you can so that you can only start to trade with shares and then leverage from there. Because options are great, but I'm telling you, once you get your account to like over 100 grand, you can't trade with that much options. Like you really can't. Like you're gonna be paying too much in slippage and fees and a bunch of other shit. But what we're really looking for, Jim, and everyone else too, is we're really looking for volatility. The stock does not have to go up. It will always do better when the stock goes up because remember, we're following the trend. This bot is not set to short, but I can set it to short. I just will not set it to short until we're trading under our key levels on these big ass time frames, which isn't happening right now. But what we're really looking for is a lot of liquidity, or not a lot of liquidity. I'm sorry, is a lot of volume with options and whatnot, but we're really looking for volatility. A good example here, if I can find it. So Riot is a very volatile example, but a pretty good example at that. And then I am going to have to hop off. I didn't realize we're on for 90 minutes already. So if we look at this return, right, in the past 4.6 years on Riot, for those of you who do not know what Riot is, basically Riot is I believe they do mining for Bitcoin and cryptocurrencies. So I hope you guys can see this. But basically in the past 4.6 years, we would have made a 1,587% return, while the asset only did 140%. So as you can see here, we don't just need the asset to go up. What's funny enough, guys, is look at this, right? Oh, shit. Sorry. Hang on. Let me pull back out. There we go. So actually what's funny enough is like when the asset just goes straight up like it did here, we don't make as much money. We're capping our gains. Riot went from all the way down here in November all the way up to being up 1,500%. So Riot was up 1,500% and our account was only up 550. Holding the underlying outpaced us by 3 times. But then look what happened, right? As Mara cratered, our account held steady. It's not just like the stocks that go up. It's what we're really looking for here is stocks that have a ton of volatility that we can make money off of. Look how great this is. As Mara is just nosediving, we're just holding our portfolio basically sideways. And then as we start to come up, this starts to grow. In a perfect world, Jim, I would say that the real thing that we're looking for is just volatility. But I don't have all of the bots set up to be super volatile because I think we need more volume for most people. And I think that the other thing too is that the more volatile, like we're seeing here with Riot, like we said, the better long term, but the more losses you're going to incur because of all of this back and forth. What I try to do is I try to think when I'm creating these trading bots, I try to think like the customer or the consumer, like you guys, right? I want it to be to where when you enter the community, you instantly can be able to get an onboarding video, which will show you how to use most of the stuff that we have here. You can learn from the community, but I want it to be in a perfect world to where you can enter and you can instantly start making some profit, right? I would rather not put somebody in a situation where they can make more money, but they might take 5 or 6 losses in a row trading Riot. And if they're trading with their entire account, that could be a max drawdown of 20%, right? So just remember that when you're looking at your account, like if you lose 50% of your money, you need to make 100% return just to get back to even, right? So that's why risk management is so key. Jim, thanks, makes perfect sense. And on these tickets is the main closer spreads on my trading platform in the UK. I don't know what you mean by that. Is the main have closer spreads? Oh, does the main tickers have closer spreads? The main tickers will usually have a much closer spread. Like if you look at the bid ask on SPY, Apple, AMD, etc., like they're all going to have very close bid spreads or bid ask spreads. All right, guys. Thanks for all of the support. Thank you guys for everything. I hope you have a phenomenal holiday for you guys in the UK. Just enjoy your day off. Linda, excellent first day of premium. Thank you so much, guys. Yeah, and this video will be, it's recorded right now. So if you miss anything, I will go through. I'll probably have my brother, who's my executive assistant, edit it a little bit, not take anything out, but just some of the ums and stuff. And yeah, I'll post that, and then I'll see you guys on Friday. Friday's probably going to be boring. Like I'm just throwing that out there. There's times where the market's popping and we're ripping trades left and right. But Thursday, obviously, market's closed tomorrow. Friday's a half day, so the market opens normal time, closes at 1:30. Which please be careful. Last time this happened, I think was Labor Day or Memorial Day, whichever the one was that most recently happened. I forgot the market closed at 1 and I didn't close my day trade and my contracts got nuked. It really messed my trade up. So remember that, and if it's super slow, take the time to just relax, or watch some of the content that we have here too. So enjoy your holiday, guys, and I'll see you next time. Peace.